All right, we are live. Welcome, everyone. We are going to talk about Palantir today. We have one non-Italian. We have another Italian here, although some of you might think we're the same person. I hope this stream shows that different people, although maybe it's AI generated. You never know.
Is Gemini generated by Gemini, which means
Yeah,
twin.
Gemini, the second one. So we have Arnie back on the channel to talk about a very crucial topic. And that's, of course, a follow-up of the, well, I sold Palantir video, which, to be honest, I expected the comments to be more negative. But I guess my sentiment test failed. So I have to go buy everything back. No, just kidding. I still remain the same.
Be fast before the momentum gets traction again.
Exactly. So in today's video, we want to talk about Palantir, selling, buying, selling part of it, continue to hold, the logic behind that or not. And then, of course, if there are questions in the chat, we'll address those as well. But I'll leave it to Arnie to start here.
Well, I think everybody have seen the price action of Palantir, which was more than unexpected, I would say. I think both of us had very good expectations going into 2024. We were convinced on the business fundamentals. We were convinced that the price was not really reflecting that potential, and that analysts were completely missing the points, apart from a couple of them. And we were holding strongly and purchasing strongly. Now, the situation changed in a climax, I would say. And now we are here thinking, wait a second, I'm super happy of these gains, like a 300% gain in a year. Like that's completely unheard of. I made a tweet the other day sharing that I started tracking a public portfolio last year in August, with the expectation I seek to beat the market and perform around 30% CAGR for the coming years. Just a little bit of context, performing in the 20-30% range is already like rockstar performance goal. So if you are able to achieve that for more than a couple of years, but for an extended period of time, you are literally like a legendary investor, because the best investors in the world, like Peter Lynch, have performed like almost 30% for a decade. You have Warren Buffett performing 20% CAGR for infinite numbers of years. So if you're able to sustain a 30% compounded growth rate, it means you are good at investing. And I don't pretend to be good at investing, but I started learning so that I could become very good at investing. Long story short, in 1 year, I was expecting a 30% gain from the active performance, active portfolio, and I got more than 300%.
A small bit.
A small bit, only due to a tiny exposure of, it was floating in terms of like a percentage, but most of the time went up to 80% in Palantir. And it was up to 80% until a couple of weeks ago, when the sentiment not only switched, but went extremely positive, and now I reduced even more. Am I guilty of this?
Yeah, it's funny because before I made the video, I talked with Emir, and I said, I sold it all. I feel dirty. And he's like, why? And then I'm like, good question. Why? Because the stock doesn't know I sold, right? The stock doesn't know even that I bought or I sold or whatnot. And so I was like, yeah, you're right. It's up 300% this year. It's a performance that usually investors get in a decade, maybe even more. We got it in less than 12 months, actually. And I'm like, yeah, maybe I shouldn't feel dirty, because at the end of the day, you're investing. You're investing, and your goal is to make money. Now, of course, there are different types: long term, short term, trading, whatnot. But even long term investors, you probably did not think to be up that much in a short period of time. And then, just for the example, previous companies, for example, Tesla, not so long ago, 2021. Now we're at new all-time highs. So congrats to all the Tesla shareholders. But it did take 3 years of basically pure underperformance because people thought, oh, we will go higher and higher. Eventually, it didn't go higher. It went down 60% or so. Same with Microsoft and all the other big tech companies back in 2000. Not saying the same thing, but Microsoft, it took what? Over a decade to go above that 2001 level. And it's Microsoft, it's not a bad company. But still, you could have said, oh, but I'm investing for the long run. Okay, you would have been underperforming for 10 years. Is that worth it? Probably not. Probably not.
Well, I noticed one thing from your video, which exactly at the local top said, I sold Palantir, all of it. And I noticed some people of the community went very aggressive on you, like how the sort of feeling like, how dare you, you clown, like you betrayed us. It's like, do you feel you betrayed someone?
No, because it's not like if I would have shorted it, then yes. Because then I would understand the betrayal feeling. But right now, I'm just feeling that for myself, the portfolio, because eventually it's my money, it's not anyone else, it's just me sharing the information and my opinion. It just didn't make sense to hold it at these prices. And I said time and time again, if for some reason it goes down or the company suddenly grows 50% for a long period of time and then the price makes sense, I'll happily buy back. But for those that feel betrayed, I'm still on the same team. I'm still on Team Palantir, just not the stock. The company as the stock just doesn't make much sense. It's not like I'm switching football teams here. It's not the same.
Mm-hmm. Like for me, it's interesting to see that there are some people on X that completely bashed Emir and I, who were more conservative on the valuation side last year. Well, the first time that we reached like the $14-15 range, which was a price action that was relatively very violent, and but not backed by the fundamentals. And then some people even sold like just before they ran up, but they were like still like pointing the finger again. So it's like what I'm noticing is people just tend to criticize more what others do rather than thinking on themselves. And I think all the decisions are very personal. Like I see like questions like, oh, but did Arnie sell? And oh, how much did he sell? It's like,
does it matter?
Have like, well, let's first keep a little bit of suspense. but that like does it really matter how many shares I sold? And are you in exactly my same positioning in terms of portfolio allocation, awareness of other opportunities, and so on? So I would say there is not an universal rule, but there are like different principles. Because, for instance, I was also bashed last year when Palantir first reached the $15 range, and I reduced part of my position in the 11, 12.
Mm-hmm.
I was essentially all in below 10. Then the price spiked and I reduced my position in terms of percentage of the portfolio. And then, oh, Arnie sold. It's like, well, it would be stupid not to sell part of it when the condition change. I think many people just anchor themselves to the fact that if you buy something, you need to stay attached for it like infinite number of times. And I think more mature investors are the ones that don't think in terms of, oh, I buy the share and I just need to keep like to stay completely attached to it. But each time they try to evaluate everything in terms of portfolio. if you buy something and it explodes in terms of performance relative to other stuff, it automatically becomes a very, very big part of the portfolio. And yes, on one side, you're supposed to let your winners go, but at the same time, there is also a psychological aspect that you need to be aware of. Managing a position of 100% of 10K is not the same as managing up a 100% position with 100K or a million. So there are always many considerations to be added, and that's why I say is very personal, and it really depends on the not only the risk tolerance, but like the mental stability that you can deal with given your context. For instance, if right now I had a salary of $15K per month just selling courses, and with a click I make some random post, engagement farming, I make a lot of videos, a lot of money from just selling courses, I could just not care, because I would have like a steady flows of money coming into. But if, as I'm essentially doing, surviving as an investor more than as a creator, because my income stream from being a creator is ridiculous, I'm not really pushing that hard into that direction, then the situation changes and I need to be 100 times more careful. But I'm speaking too much, and I want to question you about something, because I think that brings us the conversation to like a topic that is specific to Palantir in this time, but I think it can make us reason in terms of what to do in these situations. You said I had my position. I don't remember exactly how big it was, your position, but I think it was more than 10%, something like that.
Yeah, I mean, when I saw it was definitely more than 10%. Yeah.
Okay, so it was a relevant position in terms of the portfolio, but once it arrived in the 80s, you said, okay, I want to sell it all. And I wonder,
Yeah, actually,
why?
I sold before the 80s. So on Monday it went even higher. But okay, I sold before. I never said I'm going to sell the top magically. No, I said before. Okay, still
Okay.
quite good. Yeah.
But so essentially, you took your position and boom, you sold it all. Why have you sold it all rather than, okay, I reduce a little bit and I'll give it time?
So I started by reducing a little bit before, when it was in the 60s. Same with Tesla. I took some profits here and there, 10%, 15% reductions. But then when it got in the 70s and the multiple just became bigger and bigger, because at the end of the day, if you buy a stock at a certain price, even if it's the best company out there, if it's trading at 60 times sales, for example, you are essentially already buying years and years and years of growth. Because you did a reverse DCF to prove the $75 price target, I believe, and it had to grow by what, 40% for 10 years, I believe, which is I think unheard of, right? Even with the best of the assumptions, I don't think I've seen a company grow that fast. So at first I started taking profits, and then it continued to go up. It was still above 10%. And then I'm like, at this point, it just didn't make much sense. There is a lot of euphoria, a lot of 2021 type of sentiment. I know we're not going towards a higher inflation, interest rates type of environment, but after the performance of this stock and the look of the stock market, plenty of stocks in the last couple of weeks and months alone are up triple digits. I did feel that for me personally, again, this is my portfolio, my current situation, it was better to completely secure all those gains. Plus, most of you know, I don't pay capital gains taxes, so I don't have to worry about that. If I did pay, then maybe I would have considered another strategy. And if I knew how to play the options games, I'd probably have another strategy as well, but I'm not that good with options. So that's not an option for me, no pun intended.
Well, it's interesting that you mentioned the option strategy, because what I noticed so far in terms of sentiment is you essentially lose your shares because you are greedy and you make a cover calls that just get called away, and essentially you sell the shares, and oh, that's fine, like it happens. I'm sorry for you. But if you say, oh, I reduced a little bit of my shares, you guilty.
Yeah, I mean, it is funny because it was also the opposite, right? Remember the long periods of time where Palantir just kept on going down and down and down, and we were talking about Palantir, and everybody was like, "Oh, this is a shitty company. Why buy this black box that doesn't do anything? Blah blah blah. Works with them, works with that. That is not worth it." I've seen that with PayPal. I've seen that with SoFi, and then suddenly when things go up, it's like you cannot win. When it goes down, you hold garbage. When you go up and you want to take profit, you're like, oh, why? How dare you? How dare you? We need Greta Thunberg here to tell us how dare you take take profits. But at the end of the day, like you said, it's really depending on your situation, what you're doing with your portfolio, with your money, um, and less about, well, am I going to please other folks by making certain videos and make money through that or not? Because yes, if I got, let's say, 1 million subscribers, 100,000 viewers, then I don't really care what happens with my portfolio because the YouTube channel will pay for the investments itself. So different ball game here.
Yeah, it's very, very different. And I'm seeing some interesting content, comment meanwhile, like fundamental analysis doesn't apply to Palantir.
And the same for Tesla, yeah.
Yeah. That's what people said in Tesla in 2021. And I also saw, is it possible the entrance of the QQQ to be already embedded in the price? And I would say, how do you like? What is like? How much valuable the business becomes if Palantir enters the QQQ? Because the reality is that helps a little bit in terms of perception, but it's not that automatically creates business value. So yes, like being included in the QQQ and potentially also be included in the Nasdaq index, that is very positive for the stock. It increases the appeal of the stock, but it's not just because it enters the index that the stock should rise more than a day, like maybe 1 day, 2 days, but it's like it brings more attention, which could be a positive, but it could be also a negative because maybe then you start comparing even closer what Palantir trades at, which is not relatively a cheap valuation compared with like the big tech. And you could say, well, maybe Palantir is not really worth the risk once you compare it with other big tech companies that are more mature. They pay some dividends. They buy back a lot of shares. So, like while it is true that the QQQ inclusion could potentially increase the appeal of the stock short term, that's not a guarantee that that will effectively impact the stock price. I made a research on Perplexity just to have a sense. And I saw like the last stock that entered the QQQ, essentially nothing changed. Maybe for Palantir is different because Palantir is Palantir, but again, that's like it's always hard because as an investor, you know that the truth is what the company is worth, but the reality is that there is also this perception game that in the short term can influence a lot the perception. So you need to be good at mastering. Like on one side, you need to be very cynical into staying grounded to the fundamentals or to the expectations, but at the other side, there is also this speculative game that you need to be aware of and not be crushed by that, but on the opposite, trying to bring it to your own advantage.
Yeah, no, I agree. It's a bit like the effect of a stock split, right? Historically, if you look at stock split stocks, up until the date that they will split, for some reason, most of the stocks rise. Then after the split, most of them go back down. What changed? Nothing. With the business, nothing. Just more shares, same pizza, more slices, basically. Which is strange. Which is strange. But then again, when there is momentum in the market, if it's on the upside or the downside, you usually don't want to fight it on the way up or on the way down, because stocks can go down for a long period of time, even if it doesn't make sense. Stocks can go up for a long period of time, even if it doesn't make sense either. So, yeah, Nasdaq, yes or no? I don't think it will change that much. The S&P was basically like the first big. Oh, it's now on the big stage for Palantir. So yeah, I don't know, but I think it was one of the first questions talking about if I'll have FOMO now that Trump is president and they're looking at defense contracts in a different way and how that will impact Palantir, now that Palantir gets way more attention and people that were previously in Palantir get places in the administration, all of that, if that can accelerate government. I said since the start of the year, government will accelerate because that's what management has been telling us. It's exactly what we've been seeing, but it will have to accelerate a ton more to make sense of what's happening right now.
So
Because
you
people,
don't agree with Emir, who suggests that the government side could grow at around 50%, if I remember correctly.
for how many years?
Let's say for the reasonable future.
50%? I don't know. That's quite a lot because government, again, it moves very slowly. I mean, like we've seen there it's been. I don't remember the graph that he shared, but it's been up, down, up, down, up, down, and even the up ones aren't that much up overall. Maybe that will change. I don't know, but 50% is quite significant.
Yeah. I think
I
that's
don't know.
the problem with Palantir. When you deal with a railroad, you deal with a company like Costco, like these established companies that are already at a point where they just need to continue what they are doing more or less at the same pace for many years. You know that you can attach a certain level of predictability. With Palantir, essentially, the more you think you can understand the future, the more you will get crushed. But given this observation, that is why even when I reduce the portfolio size, I always keep a part of a portfolio of the shares, because I always say, what if I'm wrong? Aren't you scared of missing potentially like a crazy ramp up just because you are missing some future that is just soon to happen? Like right now, we see Carp being appreciated by Elon Musk. We see David Sachs entering essentially the government. We had yesterday night, the announcement that the advisor to Alex Karp, Helger,
Yeah, Jacob. Yeah.
has just been nominated into the government as well. So it's like, it seems there is a constellation of people that are very, very favorable to Palantir, close to Palantir, and until that could really help the government business side like to get more traction. So aren't you kind of afraid of missing the entire potential ramp up?
There's always a risk of, well, I sold in the 70s and it will never go back under 70, even though I think today it went to 69, which is not a bad number. But even with all the announcements, I still think it will take way more time than what people expect to see huge positive effects. Because again, Palantir is not the only player when we get defense contracts, right? I think last week, Raytheon or whatnot got another $500 million in contracts or something like that, and I expect that to continue because the government, even with Doge, defense department is still quite big. A lot of people make quite a lot of money in that, so I mean, I hope Palantir gets all of the contracts, but I don't think that's a realistic thing to say. Plus, on the flip side, it's like risk reward wise. How much more can it go up? Then again, how much more can it go down? That's also a question. But then, how much more can it go up? Risk reward wise, even if it goes up another 20% or something like that, maybe that's purely market momentum. And then whatever I'm holding now in my portfolio also can go up 20%. And valuation there makes more sense. Someone asked me, what am I doing with the cash? Currently, I have increased my cash pile quite significantly because, well, it's been an incredible year. I did buy more Google on Monday. Good timing. Then they suddenly came out with their quantum computing, now Gemini 2. So stock is now back up to 190. So I'm pretty positive with that. I did go with the contrarian trade of opening a position in Uber because I don't see that company going away anytime soon. But then again, people will call me an idiot because robotaxis will destroy it tomorrow. I don't see that happening, especially not in Europe or any other place outside the United States, and even in the United States. But yeah, I'm in cash. If the stock goes down enough, I'll happily buy more. And if I miss, I don't think I'll miss. If it goes up, it would.
How much it should go down in order to make it appealing again?
With the current metrics and the current numbers that we know, I'd probably buy under 50 a lot.
Mm-hmm.
But then again, if 2 months from now we get a quarter with 40% year-over-year growth, that changes it. And then with good guidance, because even with the guidance that get updated right for the last couple of quarters, technically speaking, how much was the increase? Couple of what, 200, $300 million, something like that, I think, maybe a bit more. And market cap wise, we added quite a lot, right? So yeah, it now becomes a type of game that they have to play also with Wall Street, because Wall Street is definitely giving them a super high premium. But then on the flip side, they have to give something back to Wall Street, which are probably continued accelerated growth and great guidance for 2025. So yeah, no FOMO right now. Maybe younger me would have a lot of FOMO, but not me
not
right
a wise,
now.
old couch investor.
I mean, I could be making a huge mistake. I don't know. We'll find out in the future. So we'll see. We'll see.
When I see the price action that we are currently seeing, that the stock is literally smashing completely all analyst expectations. Like even the most bull analyst need to keep rising the price target because the stock moves too fast. We are now at the point where the stock is around 70 and the average analyst target is around 40. And Visa 40 comes from a very wide variation because there are Mariana and the knives essentially at the price, and at the same time there are like very bearish ones like Di Palma and Citi, like they tend to be like more close to 20 or 30 or so. So that is interesting. Like as of today, analysts can't explain the valuation. Like the price moves just too fast. But if we remember, last year we had exactly the same dynamic when the stock moved to 15 for the first time. Like there was this insanely strong ramp up that here Arnie already felt rich. And I remember I shared the article called Palantir is in the danger zone, because essentially what was happening back there was only price appreciation that was moved by let's see, like
this
let's
is
go back in
Palantir
time.
Bullets, by the way. Everybody should subscribe.
Thank you. So we had this insane ramp up. I took the chart from here. But what happened there? Like this was a complete expansion of the multiples. This was not driven by the business per se, and that's why the stock price was very high compared with the peers. But analysts were actually very negative. At that time, analysts were expecting 20% CAGR, and it turned out that now the growth is around 30%, while the margins are expanding way above what analysts were expecting. Here you can see 500 divided by 2000. So analysts were expecting for 2023 22% margin, and that essentially to stay flat 25% in 2024, and now we are at 40. So these numbers, the revenue growth and the profit margin, were completely smashed from analyst expectations, and that's why now we are at the price that we are at. But since I published this article, it's not that the stock moved up straight line. We had many months where we could see it from again from this chart, from this 15, we essentially had 6 months of flat price, where essentially the fundamentals needed to catch up with the price. And it was not only the fundamentals, but also the narrative. And the fundamentals were driven by a dynamic that changed completely the numbers coming forward. The initial spike was due to, AI is the next big thing. Let's invest into AI. Let's buy some AI companies, AI stocks. But then you had also AAP to be launched in April, at the beginning of May, and it took 6 months essentially before it started having a real impact in the numbers that we see from this spike here. So the risk that I see currently in the stock is that the price has run so much now that it is absolutely reasonable that the stock can stay flat for some other 6 months until the fundamentals catch up. And if the fundamentals catch up, then the multiples gradually decrease and the stock becomes appealing again. This could not happen and the stock can just go to the moon and whatever. But as investors, we need to be always aware that the moment the multiples are very stretched, meaning that the valuation is very high, you're essentially having the probabilities against you in terms of stock performance. So on one side, that doesn't mean automatically, I need to sell, but at least you need to be aware that the expected return that you should expect is more difficult to achieve when you start from very high multiples, because essentially you need the company to grow so much so that it grows into the valuation and keep exceeding the analyst expectations. But personally, I think are still low compared with what we could potentially see. The analyst expectations right now are in the 25% range and the 30% free cash flow margin. I see reasonable that we keep 30% for many years while having 40% free cash flow margin. But that is the baseline, just to stay more or less in this range and expect a normal performance in line with the market. This 30% growth combined with 40% free cash flow after tax needs to happen. And that is easier said than done.
I agree. This is still here. There is here a quick question. Do they pay you, Arnie, to promote Palantir?
No, I wished I was paid because given 2 years and a half and and the numbers, but no. I saw there are some very big YouTubers that got paid good money to promote Nvidia and some other penny stocks. I've never been paid.
Yeah,
I
I
received some
wish.
merch. Like
Yeah,
I received a black box. Okay, but I
with
was
our
not.
data inside. No, but switching back to what you said, it makes sense. I mean, again, I'll just use the Tesla example just because it simplifies stuff. But I'll add the disclaimer that it's true that Tesla did also go down because margins went down, interest rates went up, and all of that. But it can be that you're buying a stock at today's prices or you're holding at today's prices, and the stock does nothing for a long period of time. And is it worth it to keep it just because we feel, let's say, attached to it, even though it doesn't make any sense? We're talking about stocks here, not a wife or a football team, because a football team I can understand. But yeah, buying a stock at a ridiculous multiple is usually a death sentence in your portfolio's performance. Then
There is
again,
a this comment. It takes humility to hold, and do you agree with this?
no, not really.
Or it takes
They,
ego
it
to hold?
well, it goes both ways. It takes humility or ego to sell also, right? But different, because now it's completely different, right? With the way of investing scene right now, it's very social. So everybody feels attached. Oh, this creator sold, this creator bought. I should do the same, but it doesn't make any sense. It doesn't
Don't
make
you
any
like the
sense.
drama?
I like the drama and I like the nice comments I get, but even the nice comments to me, I always have to correct them. I'm like, I didn't push the button for you to buy a certain stock and now you're up a significant amount. Like you did it. I just provide information. Whether or not you buy or not is up to you. And it goes the other way around. Like, oh, you keep talking about this company and it performs badly, blah, blah, blah. I'm like, so what? Last time I checked, it's my channel. So if I want to talk about the weather, I'll talk about the weather. But yeah, it has become sometimes a bit childish, but at the end of the day, you're talking about investing money, in some cases a significant amount of money. My portfolio keeps hitting all-time highs in recently, which is crazy. And I still consider myself young at 30 years old. So to see all of that, yeah. After 2021, I am being a bit more cautious, because back in 2021 I was like, oh, everything continues to go up. It has to go up, right? It has to continue to go up because that's what's been happening the last couple of months. No, it does not. Like plenty of companies have continued to grow since, but the stock came back to earth and came back to reality because it just didn't make much sense. And yeah, that's basically why I sold it all, and I don't hold a small position. I could have had a couple of shares, but then again, what's the difference? It would have been the majority out, and the small amount of share wouldn't really made much sense because even if it goes up, it has minimal impact on my portfolio, and if it goes down, it's just money lost. So
Just a curiosity, do you have like two different accounts? Like I
yeah.
personally have one account where I have my no touch Palantir shares, which I slightly touched this time due to this extreme overperformance that I was not expecting. And the other account, which I call it like the trading account, which is the account I'm trading, like I'm tracking, where I'm very active, which I use, yes, to generate performance, but mostly to learn how to be more effective, like how to improve my rate of not making mistakes. And I try to manage the two portfolios very differently, but always keeping in mind like a big picture of the portfolio, because like that's how like my net worth is is attached to that. And personally, like right now, I like to have my shares in the no touch account that are a percentage that make me happy no matter what. Like the position is big enough so that if Palantir keeps rising, I'm absolutely fine. But at the same time, if Palantir crashes 50%, it's like, yes, I can't be really happy, but at least I know it is not such a big position that would damage my calmness as an investor. And actually, I'm ready mentally to add more, since in these last years, I tend to be like very aggressive on one side of the portfolio, and on the other side, like very, very conservative. So it's like if I have a Palantir position that is very aggressive, I also want to have like a cash position that is also very, very, very defensive. So that's how I tend to think of my portfolio overall, having like the no touch side and the very, very active one. I try to manage the two with two different like approaches. One is just Palantir and cash. The other is what comes to my mind. And I try to allocate having like this whole picture. Like, how do you manage the portfolio?
Yeah, so I have one portfolio that I started in 2016. The one that I cover on the channel is one we started in February. The amounts are also quite significant in the main portfolio, and there it's different. It's like the top 5 is Tesla, Amazon, Meta, Google, and now it's actually top 6 because with Google's recent rise they went up. So it's like Tesla, Amazon, Meta, Google, and PayPal, and Mercado Libre basically makes up now 75% of the portfolio. And that portfolio is in an account that I rarely touch because the fees are just too high. So I'm like, no touch there. On the other side, the portfolio now, which is performing quite well, there I am more maybe trigger happy, let's say. Since again, I don't have capital gains taxes, I don't intend to trade on a weekly basis. But with that portfolio, I can take like contrarian bets, like the 2 Chinese positions I took for 2025. I'm not putting it in the main portfolio, I'm putting it in this one. It's also a way to learn, because at the end of the day, I think I learn way more by using my money, because then my mind completely changes. Because when you use fake money, it's like, okay, who cares, right? We talk in the air. But when you talk about real money, then things are a bit different. So yeah, in this portfolio, and that's why the cash is now, I believe it's 20% of the portfolio now. So yeah, I'm back on the, let's say, defensive side, even though I have a couple of short-term positions opened, like Micron, like Transmedics, and Uber. Micron is an earnings play. Still think it's a good company, but I'm like, this stock doesn't make much sense now. There's earnings. I think it will pop. Might not. This is a gamble I'm taking. But this is something I will do in this portfolio and not in the main one. The Chinese stocks are Alibaba and PDD, Pinduoduo, PDD, not the rapper.
So do you think there is actually a learning side? Because on one side, as an investor, you want to learn to hold, but at the other hand, you don't want to learn to hold blindly, isn't it?
Yeah, no, for sure. I previously was on the side of, oh, I'm holding and I don't care what happens. But of course, then I got hit with a 60% 60% down stock. Of course, it's also timing with macro, even though you shouldn't really focus that much on macro, but sometimes, yeah, it impacts your portfolio in a significant way. So yeah, I mean, still learning. So I think. Yeah, go ahead.
I want to show you a little clip, if you want, that I made like 2 years ago. This was in February 2022. February 2022 was when Palantir was dropping. So it reached already the peak of 30, 40, and then it started the long, painful crash. And I made this video explaining like mistakes I made. But this, like the first one, I think connects exactly with what you were saying. And I'm very curious of your reaction. You buy something and the price goes parabolic, you start thinking, oh, I'm a genius. And then the confirmation bias arrives. That prevents you from doing the right thing, which was selling in the middle of euphoria. Palantir was doing great. It was receiving a lot of new contracts, but the price was going way too far compared with the underlying business. Memes were a clear signal that the market was exuberant. To be clear, I sold most of the shares here and took some profits. My idea was to take the gains and stay invested with an amount equal to my initial investment of 10k. But still, I think I made a mistake. Even when the price was $40, I didn't want to sell. I felt attached to it. What's worst is that I realized Palantir didn't deserve a price to sales multiple of 50. I found it very hard to combine what was reasonable, the price was not reasonable at all, with what Peter Lynch says about not cutting your winners. And that's a great principle, unless the price goes completely mad. If the price moves to 100% in a month, for a business growing 50% yearly, that is a red flag. I absolutely love Palantir business, and I'm sure Palantir will grow exponentially, but that will take time. I understand. So, does this clip resonate somehow with you to what we are currently seeing right now?
Yes, and it's good because it reminded me of something I wanted to address. In the meantime, there's Amir that's not happy here. You're lucky Arnie refuses to come on my channel, but he's happy to talk to you. Well, Amir, to be honest, you already get Arnie each and every week on Palantir Weekly. So
you get your dose.
Yeah, exactly. No, so yeah, I wanted to address because I've seen that comment under one specific video. My mistake previously was to sell Nvidia too early because it went up 300% for me already. But it's a mistake. That time it was a mistake, and it's not comparable to Palantir because I sold. The stock was not pricey, so was not really at 50 times sales. The business was doing quite well. The only reason I sold was because I'm stupid. Is because it was up 300% in not a so short period of time, but I was like, okay, that's quite a lot. So let me sell, and that's where the mistake comes in. Is where don't cut your winners. And in this case, I shouldn't have cut it because it was not trading at the same multiple at Palantir today. And so I don't think people can compare my mistake of selling Nvidia, because now in my eyes, it's not a mistake selling Palantir. Even when Palantir went to 80 on Monday, I was still happy with my decision. Of course, if I could have held Palantir and it went to 1,000, okay, congratulations, we're all multimillionaires here. But it's not the same selling Nvidia for 300% gains, but the business is still growing extremely quickly, which Nvidia was growing, was expected to grow suddenly super fast, was growing 80% quarter over quarter, that flip moment, which I don't think we're seeing with Palantir, growing 80% quarter over quarter or so.
Is there a specific reason why you don't see that happening?
80% growth quarter over quarter? No indication. There's no indication of that happening. I mean, remember how happy we were seeing just 30% year over year growth. Mm-hmm. So 80% quarter on quarter, I think that's quite, again, one of a kind is Nvidia. I don't think we're going to see anything like that anytime soon. So yeah, it's completely different in my eyes. Nvidia was a very big mistake on my part. And Palantir, in my eyes, right now, I don't think it was. And I'll happily buy back more when it makes sense to me.
Well, the potential critique that we could see here is that essentially, if someone sells the position completely, it's like saying, I don't expect Palantir to sustain or accelerate the growth rate above 30%. But what tells us that we are not in that kind of exponential movement that has just taken shape and now is just on the verge of a dramatic acceleration? Because that was the case with Nvidia, but I keep asking myself, why should that be the case with Palantir too, or why shouldn't be the case?
Mm-hmm. Yeah, but okay, now because the first 80% quarter over quarter growth for Nvidia came as a surprise, right? But afterwards, guidance was already updated to show us huge amount of growth. With Palantir, I don't think we have seen guidance raised by a significant amount that will show us, wow, 50% growth is quite realistic because guidance is now $4 billion or whatnot. Guidance was raised, but was raised by always a tiny fraction every single time. That's also one of the main arguments of those that are skeptical about Palantir is like, guidance barely grew, yet market cap wise, it increased by 100 billion or something like that. So yeah, currently, if guidance was much better, then yes, maybe there are some indications of seeing Nvidia-like growth, but I don't see that happening just yet. Might happen, and then of course would make sense for the stock to trade where it trades, or maybe even higher. But currently, no indication.
So you don't see the 100x potential from here?
From here, a $17 trillion company? Unfortunately not. But now, jokes aside, I also see a couple of people say, oh, Palantir is going to be a $1 trillion company. It's true that we are already in the $170 billion company, but a trillion is a significant leg up. Like if you look at the companies that are trading over $1 trillion, okay, Tesla is the outlier here, but the amount of revenue and operating income and free cash flow that these companies are generating is quite a little bit more than what we're seeing right now with Palantir. It's possible that it can reach $1 trillion, but I think people have seen quite a lot of thumbnails and that they think that reality is just behind the corner and $1 trillion will happen in 2026, which, I mean, if it happens, congratulations, but let's be realistic here. I don't see that happening.
So you don't see that happening
in 2026?
You don't see that happening into a reasonable future? Because like when I read
what's reasonable?
When I read that comment, Palantir has 100x potential from here. I thought, well, I also have the potential of becoming richer twice as of Buffett. I have a potential, but everybody has the potential. That doesn't give me any information.
Yeah, not for real. And again, you asked a reasonable time. I don't know. $1 trillion from here by 2030, even though it's 6 years from now, well, 5 years from now, close. It's still, I mean, a significant amount of growth that needs to happen to reach $1 trillion for it to make sense. And that's the thing. Since we are already at such an elevated price, how many years are we already giving the company by buying today or holding today, whatever? So that's the thing, especially if we compare it. Okay, you cannot compare, but if you look at Google, for example, was 20 times forward PE, free cash flow, I can't remember, but it's such an amazing and crazy business that's just printing money left, right, and center, and yet that one doesn't move much. But if you compare the fundamentals of Google, let's say, and you see what it takes to be a $1 trillion company, then you look at Palantir, then you can already visualize what type of growth needs to happen to reach $1 trillion in valuation in the future. And I think many just don't see that. They just see, $1 trillion, okay, could happen. But yeah, how many years will we wait for that?
What really fascinates me is that when you're at a very low valuation, like at 8, you see $10 as if like, wow, like one day you will reach $10. One day in the future we'll reach $15. And now we are in that moment in time where as soon as like we crush every dollar, like we went from 40 to 50, it's like, oh, and then 70, boom. And then like at 80, we were already thinking, 100 is just there.
Yeah, 100 is just there, but market cap wise, it's a lot of billions that needs to be added to reach that. But yeah, I mean, it's
Can
a
I
great
show
company. Yeah, sure.
can I show you something that makes me, I can't say nervous, but at least makes me think. Like,
Hmm.
is Palantir kind of a short candidate from from hedge funds by looking at this? This is a chart showing all the SaaS companies and essentially ranked by the revenue growth and their next 12-month multiples. And it seems we have an outlier here.
It seems. It seems. It's something special. Yeah.
And even if you say, oh, but that is based on the sales multiple, and Palantir also has a very strong free cash flow margin. Okay, yes, but this is the average of these SaaS companies trading at around 33 times free cash flow. What is Palantir currently trading at? Like 3x that. So that's something to keep in mind. Once you have an outlier, as if like a Tesla was clearly an outlier in the automotive sector, you should always ask yourself, okay, it is true that the company is outstanding. What makes me confident that we can sustain that? Because, for instance, what you missed with Tesla, like with Tesla, you said, "Oh, I wanted to hold," but what was, in hindsight, the things that made you think, "Oh, actually, it would have been better to sell"? Because I remember, like in 2021, the Tesla story was perfect. Like I was at the point where I was thinking, "There's nothing wrong with with this company."
Yeah. No, the story was perfect. The momentum with the company was pretty good as well, because I mean margins were going up. So margins were going up. They were selling vehicles at a super high premium. But even at that point, it was trading at an extremely high valuation. It was back then $1 trillion company. So that's what I did not see. And then even after a quarter or two of margins coming down, you already know that we're going to get inflation and then interest rates go up. Something here should have like clicked and like, okay, doesn't make sense anymore to be at near $1 trillion valuation, because margins are coming down. So definitely the premium will not be warranted for. I didn't know, right? Hindsight 2020. Now we know that inflation would be here for a significant amount of time. But even at the top, it's not like valuation wise it made sense. It didn't. Even and today you can make the same argument, but the flip side, right? The side of inflation is coming down, interest rates is coming down. So there is definitely some momentum with Tesla, plus new models getting launched next year, volume going up 20 to 30%, if we believe the guidance that they gave us. So, okay, maybe now it's worth paying a small premium, even though I also took profits from Tesla, didn't close out, did take some profits. Because with them, I see way more acceleration that will happen in 2025 compared to what's expected. So yeah, different but same, but still different, if that makes sense. And hearing Nat saying you guys forgot to mention that the fact the CEO sold a lot of, yeah, that's also the thing, right? Everybody's angry with us for selling, well, me selling completely, you selling a portion, but yeah, management is also selling Palantir shares. It's true that they have a significant amount of their wealth in Palantir, but you as well, you had 80%. So why be angry?
Has the selling from insiders affected your thinking into pulling the button?
No, rarely. I as a YouTube channel, I get a lot of comments of, "Oh, insiders are selling." I'm like, okay, so they sell. Jensen once sold $700+ million worth of Nvidia shares. Did that stop the company from going up and up and up? No, because eventually it's the business that does the talking. Plus, you never know if it's to pay taxes, options get triggered, compensation, blah blah blah, pre-planned selling. So it really depends. And I highly suggest everyone to go watch the video on Emir's channel with regards to the SARs that might and probably will impact Palantir's next quarter. So no, insider selling, not really. If I see insider selling and the business does not perform as well as expected, that's something else. Then it's like, okay, they're already jumping ship and I'm just here to hold my bags. So voila.
Well, I also received like comments of, oh, but Carp is selling, oh, but Sham is selling, and this also when the stock was very, very low, like below 10. Oh, but Sham is selling. No, please stop it. But that has continued. I'll tell you, I've never paid much attention to the insider sales because I knew it was just a matter of taxes for them, but also part of their compensation. Like I checked their salary, like the base salary is still high for a normal guy, but it's definitely not high at all given the level of the company, the kind of responsibility they have. So they literally have almost all their salaries linked to the shares. So when they receive the salary, essentially they receive a lot of shares that they can immediately sell. And on the other side, they are also incentivized to sell for tax purposes because when they receive this salary in terms of shares, they're heavily taxed. So if they don't sell automatically the shares, they would need to pay with their own cash to hold these shares. So I never really paid attention, like never put the emphasis on. But I noticed that in these last 2 months, essentially when the price spiked very, very hard, the insiders' activity was not, they're just selling due to taxes. Like there was like the intention of reducing, which makes me think, okay, they're not selling out all the shares, they're just reducing a little bit, reducing enough in the range of 20-40% of their total shares, which is not something relative, not small. Okay, I'll do something in that direction. And I personally think they know what's going on with the SARs that we've been discussing at Palantir Weekly. That essentially is an expense that is expected for those who made the homework to occur in the first quarter of 2024. We are still kind of 2 months from now. And
because the price went above $50.
Well, we are two months from now from having the results of Q4, but essentially these stock appreciation rights generated a cash outflow from the company of around 1 billion, and the company needs to record this expense as an increase in stock-based compensation, which personally I think nobody apart from Mariana and from us is really expecting. So in a situation like this, I personally prefer to be careful. So my overall approach to the share right now is I want to be exposed, but I don't want to be overexposed as I was a couple of weeks ago. I was literally very exposed. And right now I'm playing more the defense. Like I think the big part of the stock appreciation has occurred. I think over time the stock can keep performing well. But as I was also mentioning in the chapter 2 of the video I was sharing before, it takes time because essentially when the valuation moves very, very fast compared with a business, it's like you are buying time for free. And right now, my feeling is Palantir is pricing at a price where it should have traded in at least 3-4 years from now. And I think I'm not the only one thinking that, but also the management itself. Since the SARS, so these stock appreciation rights, this bonus to employees that we were talking about previously, was given with the premise of, if the stock price reaches $50, but it gets like a very substantial bonus for employees if the stock exceeds $70 up to 2029. So it's a 5-year horizon for this bonus, and in less than 1 year, the stock has already reached that. So even if I typically don't pay too much attention into these dynamics, this time, given the speed with which we got there, I realized, okay, it's worth paying attention to the constellation of things. This is a big expense, but I know it will happen. I know most people are not realizing it will happen. The management knows it will happen. The stock has appreciated more or less in 1 year what the management expected to reach in like 3-5 years. What is my conclusion up to here? That yes, the potential future could keep improving from here, and I want to be exposed to that, but I don't want to rely on a future that is expected to keep improving to justify my investment being worth. Otherwise, I would be the one risking to lose on the opposite, like years of compounding, even at a risk-free rate, like potentially. Imagine when Tesla was at the peak, if you sold and waited 3 years until this moment, you would have been better off, while also sleeping well at night, keeping your money in treasuries.
Yeah, no, I agree. And I mean, as we've seen, earnings can have violent moves on the way up, but also on the way down. When algos will get the headline numbers, they will probably see a huge miss, and sell off, if that's what's going to happen. Algos don't care about feelings. They just read the numbers, the titles, and then puff, it goes down. Then, of course, it's up to the management during the earnings call to change the story, maybe the narrative around this all, and the stock might rebound. But yeah, it's something that's coming. It's something that not a lot of people know it's coming. And yeah, it's just added risk. And like you said, you invest to buy time, and by buying the wrong thing at the wrong time, you're losing years, probably years of your time, of your investment time frame. And yeah, I mean, if the company suddenly comes out with a quarter of 40% year-over-year growth plus the miss, what do you think will happen?
The fact that I think the headline would be more into Palantir misses is what made me think, okay, I prefer to be defensive now. I don't want to be overexposed again. I'd rather be wrong, since I also got very nice gains up to here. So I don't need to be like, I need to satisfy my ego. Like, he's already satisfied. And because I think that is more unexpected and potentially more headline for newspapers, for algos. and for the insane amount of bears that are there waiting for
Waiting.
a misstep for Palantir to happen. Like you see already, as soon as there is a 30% drop, you see, oh, nature is
This makes more
healing.
sense. Yeah.
And it's like, well, still a long way to go, but
And then
like
it's up 3%.
so you see, it's like when you have these moments and these talks, like everybody will likes to talk about it, and you get very polarized opinions. They're like the ones that stop reasoning and oh, shit goes up and fine, and there are the ones, oh, Palantir is a bubble, yes, but they keep saying Palantir is a bubble also when it was $10, and they don't really see, like when people argue, oh, this is a bubble, I very rarely, well, say no, I never see someone really articulating why it is impossible for the business to achieve better goals. And typically the answer is, oh, yes, but if you look at the analyst expectations, no, analysts were completely wrong. They were always wrong. So use your mind. What are the business causes that would make people, that would make Palantir fail to reach 30% growth or more? And at that point, nobody really answer. It's more like, oh, but no company has ever done that. Yes, no company has ever moved from negative free cash flow to 40% free cash flow in a year and a half, while also accelerating growth. So the answer, oh, nobody has ever done it, could be true, but and is not like a supportive factor, but is not an answer that satisfies me. And this is the moment of the questions. Like I don't really see bears articulating well why Palantir could not achieve the goals or even exceed the targets, which are implied by price, are ambitious, but personally, I've never seen like a very well articulated thesis on the bear side. So if you have, please do that. But on the other side, I see bulls that are like, or just bulls for the sake of it, or is just hard to put together the points. Like credits to Emir, which so far I think is the one that is really trying to push hard into, okay, what could bring us there?
Yeah, no, I agree. And usually what we get is the same argument with NVIDIA, right? NVIDIA Cisco. Oh, because Cisco's graph looks like this and NVIDIA is looking similarly, then what has happened before will happen again. Just it's not, it's an argument, but it's not a valid argument. Like, okay, it happened before with Cisco, and why is Cisco the same as NVIDIA? How does that make any sense? Same with Palantir. Oh, nobody has done that before. Okay. Nobody has managed to scale electric vehicles either until Tesla came in. So this argument of, oh, I didn't see it happen before, so my brain can't comprehend it right now, and so that's why it doesn't make sense. To me, those arguments don't make much sense. So yeah, and it's on both sides, right? The bullish side and the bearish side. Like the bullish side saying, oh, it can 100x, 10x from here, 100x from here, and then on the bearish side, it's like, oh, this is worth $7 today. I'm like, okay, both of you explain exactly how we reach those numbers, and then it's basically crickets. We are not hearing anything from anyone. But as creators, we get the sentiment check in the comments, whether it's bearish, bullish, and then we can like, humidity in the air maybe. We're like, we are nearing a place where things start to get quite interesting. Then again, I'm comparing here different periods, but it's interesting. Last couple of things here. Last thing I want to ask actually is now what's your portfolio like, since now it's less concentrated, let's say, in Palantir?
Well, I have a huge cash pile that I'm not willing to deploy like in the next 1 or 2 days is more like I don't need to rush for a decision just to be exposed to the market. Right, like right now, I told you I have these two portfolios, like the no touch one, which is just Palantir and cash. More or less, it's probably 50-50 or less. And the other, the trading account that has Palantir, MSCI, and another company that I've been researching, but I'm just putting all the dots together, that I will disclose probably in an article, and the cash again. But I'm very, very cash heavy, not because I don't want to invest, but I'm becoming very, very picky when it comes to the companies that I want to have. And since right now the market is not at a valuation that screams, oh, I need to be exposed, I prefer to be relatively slow into deploying the cash.
Yeah.
I personally love having MSCI here, which is a company that I shared a thesis about. That is a company that benefits directly from market rising. So now the market is high and relatively hyped. This company makes automatically more money from people being greedy. And I love that fact.
Yeah, no, fair enough. Fair enough. I just want to touch on one thing here in the chat. Who needs 10x from here? If it goes to 200, the person buying at 80 will make more per share than the people who bought at 7 and sold at 70. I don't think that's correct. The guy who bought at 7 and sold at 70 did a 10x. The guy who bought at 80 and sold at 200 did a 2x plus.
I'm lost.
So yeah, I think there's a typo here, or maybe we're not getting that. Here, maybe this $80 to us is $1 too big money. No, still doesn't make. The guy who bought at 7 sold at 70 did a 10x. So for the guy at 80 to do a 10x, we have to sell at $800. So
the only thing that I'm really, really, really pissed off about this recent drop is that I was so close. I was so willing to make the screenshot of my first 10x, which would have occurred at 83, but no, at 81, pam. I've been waiting 10 years for this moment. 10 years since I read Peter Lynch, One Up on Wall Street, talking all the book along about his 10 buggers. And it's like, one day I will have a 10 bugger. And Palantir have been 9.5x or even more.
But and now at 72, 83 does seem a long, long way.
Yeah.
Who knows? Maybe one day. Probably one day. But would have been a great screenshot. Would have gotten $2 from the X platform as compensation. Yeah. So it's probably relative versus absolute gains in that argument. Obviously, yeah, depending on how much you're putting at 7, how much you're putting at 80, but all right. Anyways, we don't want to keep you all that missed it for too long. So I think just over an hour should be good enough. This is basically why, even we're still bullish on the company, why we decided to take, me completely, everything off, Arnie a portion. I hope the arguments here were reasonable. I mean, reasonable. It's our money, so it's not like we are football managers and we're like not making you play this week because we think you suck in training. But yeah, we know it's a retail heavy stock. We know there's a lot of emotion behind it, but we also know that in investing you have to make personal choices. And there is an answer here. If you buy a stock at 7, it goes to 70. Yes, it's a 10x, but you only made $60 per share. Big money buying at 80 to 200 is, yeah, but it doesn't matter.
Doesn't really work like that.
Yeah, it's like if I put 100 at 7, I am now at $1,000. If I put 100 at 80, it goes to 200. I don't have $1,000. I rather be option one. Okay. Anyways, do you have anything else to add?
Well, I would just say be very careful, but be open to being wrong in any case. I personally like the idea of potentially being wrong also when I trim a little bit of a position. That's why if I had to think entirely from the mind of a fundamental investor that just looks at the model and draws a conclusion, already at this price, it would be very hard, or if not impossible, to really justify the current stock price. We see that Mariana and the Knives, in order to achieve the current price, they needed to have, I would say, stretched assumptions compared with the current fundamentals that we are seeing. But at the other hand, we need to recognize that this is not a regular old style company, legacy company that is essentially as it is right now as it was 10 years ago. Like when I look at Italian companies, I look at the same companies that I was looking 10 years ago. Almost all look exactly the same in terms of growth, margins. So it's like the time has never changed anything for them. While with a company like Palantir, 1-2 years can completely switch the company. And it is fair to recognize that the business has never been in a better shape in terms of financial numbers. The momentum of the business has never been as strong, and the narrative has never been that positive. Palantir went from being a controversial bad company into Palantir is so cool. From the government side, now even that is cool, and the commercial side, the emerging AI leader. So this can literally affect also the financial numbers, the business momentum, and so on. So there are a lot of secondary effects that could really take the company to the next level. And essentially being invested means betting on this future to unfold better than the relatively positive expectations that are already implied in the price. So my job is not to tell you do this or do that. I'm aware and responsible for my own destiny as an investor. And at this point, I'm more confident into having a position that is still very big compared with like normal, like the kind of portfolio that you typically see around is still very big, but not as big as before, because I think the conditions are not that favorable for me to be overexposed. If the condition arises again, I would probably go exposed heavily again. Like previously we mentioned, there was a price spike at 15 last year, and then the stock went flat for 6 months, and I trimmed initially during the spike, and I was, but Arnie sold at 11, 12, blah, 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 blah. But then when the opportunity really arose after these 6 months of flat price, I went completely all in, and that is where I generated most of my performance. So I tend to be very opportunistical, and I recognize that is not an approach everybody should have. That is just my approach. I like to be obsessive into the company because I want to learn more how to move, because I think it trains me how to think, how to adjust my positions, how to allocate better. And I could be wrong, I could be right, but that's my journey.
Yeah, that's a good way. That's a good way to end. To end with a couple of answers for some questions. Should I go all in on Melly? That's up to you. I'm very bullish Melly, but I don't know if you have to go all in. We already touched on the CEO selling not just the CEO, management selling a decent amount of shares. I believe you have to go back 10, 15 minutes or so in the video. So yeah, all in all, good stream, good questions. I think we covered most of it, if not all. And yeah, hopefully I'll get back in pretty soon, but that would mean that the stock will go down. So not that great for you, good for me. And if I get in, and that's because the stock or the company is growing now at 40% year on year, then that's pretty good for everyone. So yeah, thank you all for joining. Grazie Arni for coming as well. And
Merci beaucoup.
voila. And we'll see you all in the next one.